Lender's Mortgage Insurance, or LMI, is it your enemy or ally? Is it your foe or friend?
Friend or foe? Let's find out. You know, a lot of people like that show, Friends, mate.
You had Ross, Phoebe, Monica, Joey, Chandler, and Brad Pitt's ex.
I've just discovered a little bit more about you. Softy. Those types of friends are great. They give you a warm, fuzzy feeling. But our friend, who we're going to introduce you to today is, well, in all honesty, he's been given a pretty hard rap. And it's not warranted if you once again stop listening to the rhetoric, think for yourself, and run the numbers.
If you're in the property investment market, you want to discover the truth about LMI. And today's video might well surprise you on whose side LMI is truly on.
And you might just get a new friend. And it's only fair that if you get a new friend today, then we get a new friend today. By hitting the subscribe button. A mate for a mate. Amiga para una amiga. That's in Spanish for our Spanish subscribers.
It's a deal then. We're going to get you a new friend and we're going to change your attitude, your belief, your mindset on Lender's Mortgage Insurance. Because this friend makes you money, which then you get the warm, fuzzy feeling. Today you're going to discover the 3 reasons why LMI should be your new friend.
Arriba!
What is Lender's Mortgage Insurance, or LMI? Is a good foundational question to start with. Lender's Mortgage Insurance, or LMI, is insurance that protects the lender, not you. It's usually a one-off payment made by the borrower at the time of loan settlement. And this is why on the surface, LMI gets such a bad rap. But for now though, let's move on to when LMI is needed. You can expect to pay a LMI charge if you borrow more than 80% of your property purchase's value.
So we pay the insurance bill to protect the banks. So it does look like a bit of a raw deal on the surface, but remember, LMI is just stuck in the middle. Not his fault.
So with that being said, let's jump straight into it. Reason number 1 to why LMI should be your friend. As an investor, you're trying to invest as little amount of your own money as possible. Lender to lender charge different LMI amounts, but we've provided you with a standard breakdown of how it's calculated. An 80% lend equals no lender's mortgage insurance. Our 85% lend would incur a 1% LMI, which is $5,000. A 90% lend would incur a 2% LMI, which is $10,000. And a 95% lend would incur a 3% LMI, which would be $15,000.
So here's the first example why LMI is your friend. The more money you can hold back increases your buffer for any unforeseen circumstances, such as repairs or vacant tenancy period. And more strategically wise, helps you to buy more properties. Not just usable equity. You can leverage LMI. Let's show you how it's done. At a 20% deposit with an average 6% startup costs, you're up for $100,000 deposit and $30,000, the 6% startup costs. You need to come up with $130,000 of your own money. But your new LMI mate comes along, right? And now you only have to fork out a 10% deposit, which would be $50,000. And based on the same average 6% startup cost of $30,000, and now a 90% LMI lend charge of just $10,000, you have a buffer, or have not needed to use $40,000 of your own money. You want more security? You just got it. You want a good chunk of change towards your next deposit? You just got it. All courtesy of your new mate, LMI. Smoking gun, mate, in property investment. It's a smoking gun. It's practically a smoking gun, mate.
If you are going to build a property portfolio based on purely 20% deposits, if you look at the numbers, it makes it really hard to do so as you have to come up with so much more extra money. Which brings us to reason number 2 to why LMI should be your friend. By having to come up with less money, you can enter the market quicker. How long is it going to take you to come up with the remainder of that 20% deposit? 1 year? 2 years?
And when you're waiting to enter the market because of this, and we can see this in today's market especially, the market jumps up 50k, even 70k. You might have actually gone backwards by waiting. Didn't know LMI could get you into the market sooner and save you money while doing it? You're starting to see he's a good mate, eh?
Which brings us to reason 3, why LMI should be your friend. LMI equals more powerful leveraging.
This will blow you away. You've got $108,000 in cash, right? And you're looking at a $400,000 purchase. You go through the average investor's train of thought and you use a 20% deposit of $80,000 to avoid our mate LMI and pay the $24,000, 6% startup costs on that. It's cost you $104,000 and you've got $4,000 in change. Now, to make this easy to understand, let's say you get a 10% return. So you generate a $40,000 return on investment.
But now, what if your mate is LMI and you use that same $108,000 to do, well, this? Buy two $300,000 properties. That's 2 times 10% deposits, which equals $30,000 plus $30,000. That's 2 times 6% startup costs on average, which is $18,000 plus $18,000. And 2 times LMI costs, $6,000 plus $6,000 equals $108,000.
But now, based on that same 10% return we used earlier, now with 2 properties returning 10%, you have generated $60,000 return on investment, not just $40,000. And if you've watched this video on how you can improve your borrowing capacity, which you haven't, well, we'll leave a link at the end as well, you know that banks like it when they lend smaller but more amounts. So LMI could quite possibly even generate you an even larger return on investment. This is bloody amazing, really.
It's plain to see, the numbers show that LMI is actually one of the best strategies to building a property portfolio. Lender's mortgage insurance is just simply how you look at it. Yes, it technically protects the banks, but you can leverage it to your advantage. Buy property sooner, increase your safety buffer, leverage with more power, and
surprise bombshell. LMI is also tax deductible. Game over. Game over, mate. So how did we do, folks? Pretty good, yeah? So now it's time for you to take action, to come up with your end of the bargain. The deal was a friend for a friend. So if you have not subscribed yet, it's time to tap that subscribe button, like you're tapping your finger on the desk to your favourite song. Hit the subscribe button and we'll see you soon. Arriba!